Hey folks, CA Rachana Ranade here, and I welcome you all to an interesting video topic which is about commodities mutual fund. Well, this is our first video on this topic, so I would want to keep it short and sweet. But if you like this video, do let me know in the comment section so that I can make more and more videos on this same topic. If I were to talk about commodities, they can be classified as agro, energy products, and metals. Examples of agro can be corn, soybean, wheat, etc. Energy products could be crude oil, natural gas, and gasoline. And for metals, it could be something like gold, silver, copper, aluminium, zinc, etc. Commodities are basically raw materials or essential products which are used to manufacture the final product. Now, these are an integral part of any manufacturing industry, be it real estate, auto, FMCG, power, cement, and any more. If you were to invest in the stocks of any of these category of industries, it is comparatively simpler to do the analysis, as we can do typical analysis like management performance, balance sheet analysis, debt to equity ratio, and so many more things. But if you were to invest in commodity stocks, then all these parameters may not be enough. We need to look beyond these parameters to take a final decision. The performance of all commodity related stocks is heavily dependent on the price movement of the underlying commodities. So, if the commodity is not performing well, typically the prices of commodity related stocks also get beaten down. Well, there could be many economic and geopolitical drivers which impact the price movements in commodities. Let's try and analyze these with the help of few examples. The very first one could be strength and weaknesses of commodities manufacturing nations. For example, Venezuela has oil reserves higher than Saudi Arabia. However, due to their weakness, they are not able to increase oil supply and thus overall oil prices remain high. The second one could be diplomatic relations between commodity producing and commodity consuming countries. For example, Australia cut coal supplies after tensions increased in their relationships with China. This led to an increase in coal prices internationally. The third one could be reserves position of commodities of major countries and their intention to maintain them at the desired reserve level. For example, USA reduced their SPR, that is strategic petroleum reserves, to cool off the crude oil prices to counter the Russian aggression. Well, these examples were just like a trailer. With this, I hope we have understood that analyzing commodity prices and commodity stocks requires a lot of research. Could there be a shortcut to that? Absolutely, yes. You could think about investing in commodity mutual funds with the help of a fund manager who has the ability to digest a lot of data. ICICI Prudential Commodity Fund, Tata Commodity Fund, DSP Commodity Fund are few examples of commodity mutual funds. Well, if you invest in such commodity mutual funds, you also get few advantages like diversification, wealth creation, hedge against inflation, exposure without holding physical commodities, no risk of rolling futures, dividend yield, cost effectiveness, easy liquidity, and flexibility on their investments. Well, I hope you have understood that how investment in commodities through mutual funds can be one of the good options. If you want to choose the right commodity mutual fund, don't forget to consult your financial advisor. But if you want to invest in knowledge, no need to consult any financial advisor. Just hit the like button and hit the subscribe button. I hope you enjoyed this one. Till then, take care. Jai Hind and bye bye.